Yo, guys, what's going on? Just want to do a quick trade recap of the trade that we took today in stream. Show you an additional trade that you could have taken. We didn't take the second one because we were already so green. We're not gonna risk profits. As well as I want to show you how I got my daily bias for today and how I knew that we were going down. So I opened the charts this morning, and what do I see? I actually seen this yesterday when we closed. I see Friday's high sitting here. I seen us take that high out on Monday, fail to close below. And then what do I see? I see Tuesday also take Mondays and Friday's high again, while neither of them can close above. Now ask yourself, why would you be expecting or wanting to look for continuation longs if price is not closing above the previous high? So that gave me so when you see this signature right here where you have two times where price sweeps and closes back inside, expect a retrace at least back down to 50% of the prior range. So I was already expecting downside this morning. Even if you go to the 4 hour and you draw out that daily high, look how you had no 4 hour closes. Again, why would you want to long and be expecting more longs up here without a retrace when you have this signature showing you downside? So expecting downside. I'm obviously sitting here. We're waiting for price to show its cards. On open, I was already expecting a move to the downside. Why? So I see the 5 a.m. candle move down, and I see this, a 1 hour fair value gap sitting here. So what? This was just an hourly inside candle sitting here, which I don't care about. I only care about candles that sweep the outside candles high or a low. And what does that candle do? Does it sweep it, close back inside, or does it close below? In which case, I look for my continuation model. So going off what I just went over, what did I see from the 7 a.m. candle? Swipes the low, closes back inside. So I'm automatically expecting 50% back up, right? But remember, I am bearish on the daily. I am expecting all of these lows to get ran down here because that's my obvious liquidity target. So I'm expecting this hourly CIBI to hold. So look what happens at 8 o'clock. 8 o'clock candle swipes the hourly high here. I'm showing you this because this is my exact my exact continuation model just on the hourly. So what do I see? I see a swipe. We hit 50%, swipes the previous hour high into CE of that CIBI, closes back inside. Again, why would you be expecting longs if price cannot even close above the previous hour high? So if I'm looking to get short, I'm looking to get short inside the wick of this hourly candle. So I did not personally short this. I waited until I was busy. I was a little busy this morning. I didn't get to the charts until about 10 a.m. So what do I see? So I see open drop, which I expected, right? Just based off this signature alone, I expected at least these lows to go. So what I'm doing, so come open, I'm waiting for price. I'm waiting to see what the 9 a.m. hourly candle does. Does it close back inside the range here? If so, I'm expecting higher prices. It closes below. So I'm expecting continuation down to take out my obvious liquidity targets here, right? All these daily lows sitting off to the left. And then we have our obvious target, which we know we've already hit now, is the end was the end log from last week. So what am I looking for? So 10 o'clock closes lower. So I'm expecting continuation shorts, but I'm not just going to short right away at a 10 o'clock. Why? Because of OLHC, open low high close, and open high low close. Right? I'm expecting some kind of manipulation. But when that 10 o'clock candle opens, I never trade in the first direction of that 10 o'clock candle because you're usually going in the direction of manipulation. So if you look here, 9 o'clock comes down. This is your 9 o'clock range. This is your 9 o'clock high, your 9 o'clock low. Out This is your hourly candle range sitting here. So 10 o'clock opens. We have a little dip down, and as soon as we close below the 9 o'clock low on the 5 minute, I'm already expecting. That's already that's already my confirmation that we're going lower. I will not look for longs if I see a 5 minute close below the previous hour low, and I will not look for shorts if price closes above the previous hour high. So I'm expecting lower because of my bias, and the hourly closed what? The hourly closed bearish. So what do? I fib out, as you see here. I fib out. I fib out I fib out the hourly candle, and I'm looking for a continuation off 25%, which I had no kind of entry here, right? Um, so I have no kind of entry at 25%. So because we're either going to, if we're going to have an expansion candle, we're going to just hit 25% and just keep on going. Sometimes we will manipulate up to 50% and then continue lower. If this closes above 50% and starts ripping, then I just don't enter a trade because I don't have my continuation model. What I'm looking for off these 25 or this 50 is a candle formation like this. I want to see the 5 minute swipe 25 or 50% like this, and I want to see it close back inside the range of this previous candle, and I'm looking to get short around the open of the swing point candle. If it's a bigger candle, I'll just get in around 50%, and my stop simply goes to this high. It makes great RR trades. This morning I did not get my limit in time because this wick up happened a little early, so I ended up getting in about here. But still, my stop was here. And my obvious targets first are I always trim at 50%. Always pay myself at 50%, which is right here. And then my final target was down to, it was a little bit lower than this because we had missed this. There's a daily low here. This daily low right here was my final target. So we ended up taking that, and that was the trade. And then you can see right here, we entered as soon as this candle closed, basically. Remember, I missed my limit right here, so price should have been about 10 points higher, and then we take that all the way down to, for about 120 points, down to that previous day low. And then you see, I'll show you what I got here. I have got, if I can find it, I followed the model precisely, and here you go. So my hourly continuation, I want to see close above or below a previous hourly. I only trade in that direction, which we had here, 9 o'clock close lower, but we wait for hourly manipulation to occur down to 25 or up. I should fix that to 25 or 50% of the previous hourly candle to look for a continuation entry, usually a 5 to 15 minute fair value gap. You can use a lower time frame entry as well, which we had what, a 5 minute fair value gap here, right at 50% of that candle. So that was the trade that we took on stream today. An absolute snipe. And then I obviously have more rules. If you're not using Notion to have your trading plan, I don't know what you're doing with it. It's a fabulous tool. So if I want to keep ranting here, the next trade we're watching. So we did not take this one because we already made bank on this one. So let's fib this out. So you can see here on the hourly, look at that, 50% to the tick. You get a 5-point swing point. Down we go. So what am I watching next? So the next candle. So I'm watching my 10 o'clock low, and then my 10 o'clock hourly candle. What does that do? It closes below, right? Close below. So what am I expecting? I'm expecting continuation shorts. So what do? I fib out the 10 a.m. hourly candle. You can already see it, right? Like I said, it's not a trade I took, but a trade that we definitely talked about. And I said you could take in a stream if you wanted to. And so this is your 10 a.m. candle. I'm expecting at least this low to go, and then obviously the new wog was a little bit more down here. So let's go down to the 5-minute. What do you see? Right, you have 11 o'clock open, sits here. You have manipulation higher to what? To 50%. What do you have? 5-minute swing point candle, and it swipes this previous high, closes back inside, also hits what? 50%. If we're going lower, this is where we expect price to go. Time was a little wonky here. Usually I like to see price start reversing around 15, 20 after the hour. Sometimes it can come a little bit later. So that's why I said, like, if I was to take the trade, I probably would have sized down a little bit just because of time. But this is how I align time with my candle body closures to really find these precise entries. And then you see you could have taken that trade back down and hit the new wog. I think the new wog is actually down on this candle. That's what's giving us the retracement here. But those were the two trades that were absolute bangers today. Absolutely textbook. Remember, it's not always that easy. Sometimes you're going to hit 25% and then just bounce down, which is okay. It's just, I personally always wait for a 5-minute confirmation. That way, if I take a loss, at least I had a 5 minute confirmation on my side instead of just shorting a random fair value gap in the middle of nowhere. So, hope you guys can take something for that. And with that, take care, trade safe. We'll see you next time.